Good morning, traders. Today is June the 18th. My name is Neville Hornsey, market analyst for YouTrading. And today I'm going to be talking about the euro, pound, and also a strategy. The trade idea today is to take a short based on this range here. I'm going to go straight into it. The strategy is a look for a breakdown of support, a retest of that support, acting as resistance, and then looking for a continuation to the downside. For me, on a 4-hourly chart, I want to see this candle close. I want to see it close bullish ideally. And then on the next candle or preceding candles, I want to see this low get taken out. And then I want to see a continuation to the downside. Using a Fibonacci extension tool, I've marked up the previous significant swing high, the swing low, and then assuming that we don't make a higher high on this candle, this retracement here up to, like I said, old support, now resistance. I'm going to use that as the sort of pullback on the extension. And then the targets are clear to see down here. So 100% of that range would be 0.850. So that would be a great target. Obviously, the rest of the targets come in as and when the trend continues. So why am I looking for this? All right, if we go to the active trader sentiment indicator and we scroll looking for the euro versus the pound, you can see that almost 80% of traders are bullish the euro pound, and that's fair enough. The pound could be under some pressure because of a strengthening strengthening USD, and also because out of Europe we've had some decent data of late. Whereas the British pound is going to be suffering because maybe the coronavirus is going to start spiking higher and causing more disruptions. So I can see why traders might be looking for longs. Personally, I use that as a contrarian indicator. So when it gets to around the 65 upwards, then I'm looking to sort of look for this type of trade where I'm going to go against them, see them get squeezed, and then hopefully puke their position. Okay, so stepping back a little bit to the daily chart, using an RSI indicator and some basic technical analysis, you can pick out these lows and highs. Obviously, your eye gets just drawn to the oversold, overbought readings on the RSI indicator. So here we have oversold. It's a double bottom, so that's a great target. There'll be some liquidity down there, and if we were to get a downside break and continuation, then that would be my ultimate target down to 0.83 and below. Obviously, if we were to go higher to test this swing high, which was the March 2020 pandemic sort of extreme, then we need to get through some of this old trading range here. We've got a bit of a head and shoulders pattern. So there's say a shoulder, a head and shoulder. It's in the middle of a range, so I don't really count it as that, but it's just to sort of highlight traders did try and push higher. They failed to make a higher high. They broke down. They kind of tested this double bottom here on the initial breakdown, but they haven't really done anything since. So it just sort of impulsively moved to the downside, came back to this sort of area of balance, this sort of W pattern here. Obviously 0.856 has been a significant level before. So that's why we're kind of sticking here. If we were to break down to the downside, first sort of roadblock will be this swing low here from April. As you can see on this Fib extension from the swing high to the failed next swing high here, the extension was pretty much hit 1618. And if we were to break lower than this swing low, then the next sort of extension, if you like, is around 0.815. So still plenty of room to the downside based on just those sort of extensions. The momentum is to the downside. We've got the 20, the 50, the 200 period EMA, all pointing downwards, all stacked lower. And like I said, I'm going to go with this momentum. I'm going to go with this price action, like the lower swing highs, the lower swing lows. I'm looking for this type of liquidity zone here to be taken. If we get down to the 261.8% retrace extension, even better. But just going back to this sort of period of time, maybe you're already in it. This sort of support zone, if you like, we had lots of buyers come in. There's lots of wicks here, and as you can see, this support zone held. Obviously, this is like a little supply zone here, this little balance area. The idea, like I said, is to wait for a candle to sort of reach into these sort of balance areas or this support zone, close, and then for a new low to happen, signaling, because you can see here, like from this candle all the way up, the lows were not taken. So for each candle, none of the lows were tested. The first test of a low was the previous hour's candle, and now we're obviously making this bearish move away from this zone. So I'm not going to do it on the hourly. I'm going to sort of bide my time. You know, it's a Friday. I don't want to take any risks. So I'm going to wait for this 4-hourly candle to close. And then if we get a lower low, I'm going to target, the first swing low here. And then, like I said, this swing low over here, which would be around the 100% extension. So breakout, retest, continuation to the downside is the idea of the day. Good luck. If you've made some money this week, try and hold on to it. Don't take excessive risk going into the weekend. All right, take care.